Nobody notices it, yet housing markets quietly freeze in plain sight today, right now. Prices look alive, but transactions are slowing beneath surface numbers everywhere and reality forming. Something deeper than interest rates is quietly choking housing demand across cities worldwide today. We were told higher rates alone cause slowdown, but story is incomplete actually here. Builders paused projects, banks tightened credit, buyers quietly stepped away entirely across markets globally. But beneath headlines, a quieter force is reshaping supply and demand balance, constantly shifting. Inventory sits unsold longer, creating illusion of stability while pressure builds silently everywhere now. Lenders fear defaults, so they quietly tighten rules without announcing changes to borrowers everywhere. Even qualified buyers find themselves rejected for reasons never clearly explained behind scenes today. Affordability metrics look fine, yet monthly payments tell a different story entirely right now. On paper, housing market looks balanced, but cracks appear underneath surface very quickly now. Population growth slows in key cities, reducing pressure on housing demand significantly today globally. Remote work permanently changed migration patterns, leaving expensive cities overbuilt more than expected today. Investors expected endless appreciation, now quietly reconsidering long-term exposure across portfolios globally shifting. Speculation cooled after rapid rate hikes, exposing fragile pricing assumptions in markets today globally. Rental yields failed to justify prices in many overheated neighborhoods right now, globally seen. Construction costs remain elevated, forcing developers to pause new developments across many markets today globally. Regulatory hurdles slow approvals, delaying projects and restricting supply growth in real estate sector. Demographic shifts quietly reshape what kind of homes people actually need over time globally. Everyone focuses on prices, ignoring liquidity drying up beneath surface without noticing change yet. Mortgage rates stabilize, yet approval standards continue tightening behind scenes more than expected recently. Even small policy changes ripple through housing markets with delayed impact over time globally. Speculators exit markets first, leaving liquidity gaps no one discusses openly behind headlines today. Wealth concentration reduces first-time buyer participation in major urban centers over long-term globally. Cash buyers dominate listings, sidelining middle-class participation quietly across competitive housing markets today. Government incentives exist but often fail to reach intended buyers effectively in practice today. Foreign investment shifts unpredictably, distorting demand in high-value regions across global property markets now. Vacancy rates rise even as affordability worsens across multiple demographics in real time globally. Urban migration slows, shifting pressure toward suburban and secondary cities over recent years now. Developers adjust strategies slowly, reacting to uncertainty rather than demand in current cycle globally. Price cuts appear minimal, yet negotiation activity quietly intensifies behind closed market doors now. Psychological hesitation spreads faster than actual economic fundamentals suggest in housing cycles today globally. Media coverage lags behind real market conditions, shaping perception more than people realize today. High mortgage burdens discourage mobility, locking homeowners into existing properties' long-term effects globally. Rate expectations shift faster than actual borrowing decisions adjust in real markets today globally. Hitting transaction costs discourage movement, especially among lower-income buyers across property systems today. Real estate feels active, but underlying liquidity is structurally weakening right beneath surface now. Policy uncertainty keeps investors cautious, slowing long-term commitments in uncertain environments today globally. Even stable economies show hidden fractures within housing accessibility trends becoming more visible now. Demand looks strong, yet financing pipelines quietly narrow across institutions behind closed doors today. Home ownership dreams shift quietly as structural barriers accumulate over years in real time globally. Developers face uncertainty, scaling back plans despite apparent market demand across development cycles today globally. Credit tightening happens gradually, making effects hard to immediately recognize in lending systems globally. Markets appear stable until sudden shifts reveal underlying fragility at unexpected moments in cycles. Rental demand weakens in pockets while ownership demand behaves unevenly across different regions today globally. Inflation impacts linger, affecting real affordability beyond nominal statistics over extended periods in markets.
Capital flows redirect towards safer assets, reducing housing liquidity pressure in uncertain times globally. Buyer psychology shifts towards caution, slowing deal closures significantly across transaction cycles right now. Structural inefficiencies persist even as policymakers attempt targeted interventions in housing markets today globally. Confidence fades quietly despite surface-level indicators suggesting stability in broader markets today globally.
Behind every listing, multiple invisible forces quietly compete for control within housing systems today. Time on market increases subtly, signaling deeper hesitation among participants in real estate globally. Discounting behavior rises, yet headline prices mask underlying weakness across transaction data right now. Buyer expectations diverge sharply from seller pricing assumptions, increasingly in current cycles today globally. Real estate sentiment diverges from underlying transaction reality significantly in housing data today globally. Liquidity constraints accumulate quietly across banking and lending channels in financial systems today globally. Even bullish forecasts underestimate structural drag within housing ecosystems over extended cycles right now. Market sentiment reacts slowly to underlying economic reality shifts in real time globally today. Price resilience often hides weakening demand fundamentals beneath surface and housing cycles today globally. Developers hesitate, waiting for clearer signals before committing capital in uncertain markets today globally. Housing affordability gap widens quietly despite stable headline indicators across economic reports right now. Mortgage approvals decline subtly even as demand metrics appear stable in lending data globally. Shadow inventory builds as sellers delay listings, waiting for recovery in housing markets today globally. Credit access varies widely, shaping unequal participation across buyers in financial systems today globally. Short-term speculation fades, replaced by cautious, long-horizon strategies in evolving markets now. Builders reduce exposure, prioritizing liquidity over aggressive expansion plans across development cycles right now. Urban pricing disconnect grows, separating asking prices from realized value in housing data globally. Global capital shifts cautiously toward predictable yield-generating assets in uncertain times right now. Affordability crises deepen gradually, unnoticed in mainstream financial discourse across global economies today now. Market equilibrium is an illusion held together by delayed reactions in housing systems today globally. Policy responses lag behind rapidly evolving housing market realities in real time globally today. Even minor rate changes create outsized behavioral shifts among buyers and lending cycles globally. Inventory concentration increases in lower demand regions over time in real estate globally now. Speculative bubbles deflate unevenly depending on regional liquidity strength across housing cycles right now. Consumer sentiment remains fragile despite strong employment statistics in broader economic conditions today globally. Artificial scarcity emerges as sellers hold properties off-market in housing systems right now. Geopolitical uncertainty influences cross-border real estate investment flows in global markets today now. Price discovery slows significantly in illiquid segments of housing market in current cycles globally now. Behavioral economics explains many irrational housing market outcomes in modern financial environments today globally. Underlying demand is strong, but access barriers distort true activity in housing systems now. Transaction volume declines quietly despite stable-looking price indices across market reports right now. Market fragmentation increases as regional dynamics diverge sharply in housing markets across regions today. Algorithmic pricing tools amplify small shifts in buyer behavior in real estate systems now. Liquidity traps emerge when sellers refuse to adjust expectations in housing cycles right now. Hidden leverage in property markets increases systemic vulnerability quietly across financial systems today now. Price anchoring biases prevent rapid downward adjustments in valuations in behavioral markets right now. Rental markets tighten unevenly, reflecting broader credit constraints in global housing conditions today now. Confidence in housing markets erodes slowly beneath surface stability in current environments right now. Buyer hesitation becomes dominant force across multiple transaction layers in housing systems globally now. Market narratives lag reality, shaping expectations that no longer fit in real time globally now. Developers reassess risk models as uncertainty reshapes investment timelines in current cycles right now. Hidden bottlenecks accumulate across financing systems without immediate visibility in lending markets globally now. Market depth weakens as fewer participants engage in transactions across housing cycles right now. Structural imbalances persist even as headline indicators suggest recovery in economic reports globally now. Shadow pricing dynamics emerge in off-market transactions increasingly in housing systems right now. Liquidity preference shifts towards safer instruments during uncertainty in financial markets across economies today now. Market psychology remains detached from underlying structural pressures in housing systems across cycles now. External shocks amplify existing weaknesses within housing markets globally in unstable conditions right now. Slow adjustments accumulate until sudden repricing events occur unexpectedly in fragile markets today globally. What happens when every silent force stops pretending housing is liquid anymore at all?